Hey everybody, it's Hussein Kabani, your favorite broker. What we're going to talk about in this video is the government's first-time home buyers incentive program. And I'd just like to put it out there right at the beginning of the video. Is this program actually going to benefit you, or is it going to buy your vote for the government? Let's start off with what this program actually is, okay guys? So I feel like there's a lot of misconception out there in the market right now. I think people think that this is actually gonna help them get in. If you don't have a down payment, you don't qualify with the banks, they're gonna do some magical thing to get you approved. It's not gonna work like that, guys. So what this program is about is people that are actually qualified. So you have to have the minimum down payment, you have to be able to qualify, you have to have income, you have to have good credit, like you gotta qualify the whole bit. So it is just really a program that's gonna help you bring your monthly costs down. And what we're going to also look at is it going to benefit you in the long run or not? Like I touched on a little bit, what the criteria to qualify for this program is going to be this. You cannot have more than $120,000 household income. So if you have $125,000 income between you and your spouse, you don't qualify for this program. It's got to be $120K or less. So that's the first thing. The second thing, like I already said, you have to have the minimum down payment. When we say minimum down payment, you could still get away with 5% up to $500,000. But if you decide to buy a property that's $550,000, you could put 5% down on the first $500K and then 10% on the $50,000 if you're buying $550,000. So $500,000, you could put down 5%. Anything above the $500,000 got to be 10% down payment. And you have to have this money for this program. The other qualifying criteria is this. If you go to an actual bank, the way that they work is that whatever your household income is, they give you a mortgage amount, if you qualify, for 5 times your annual income. So if your annual household income is $100,000, you can qualify for a $500,000 mortgage. Now, if you go with this government program, they're only going to allow you to qualify at 4 times, okay? So that means if you have a $100,000 household income, you can get a max mortgage of $400,000. So with a normal bank going a normal traditional channels, you get $500,000. You go with this program, you get $400,000. So your buying power, in my opinion, is cut down significantly. This is really what this program is about, guys. It's about lowering your monthly expense. If you decide to buy a property for $400,000, if you put 5% down payment on this property, your monthly payment is going to be $1,800 a month. If it's 10% down payment, it's going to be $1,695 or $91, sorry. So really your savings on a monthly basis from putting down 5% versus 10% is about $109. We have to look at this and say, hey, in the long run, is it actually going to be worth it for me? Because the part that we didn't touch on is the 5% that they're going to give you is a 5% equity share that they're actually going to have in your property. So whatever appreciation or depreciation you have in your property, the government is going to be in for that 5%. That's when you have to say, hey, does the monthly reduction actually make sense for me if I'm still going to have to pay 5% in my profit, in my appreciation? We've actually taken it a little bit further for you guys to give you guys some examples of it. If we have a $400,000 property, we already said you're going to save about $109 a month between a 5% and a 10% down payment. On an annual basis, that's going to turn out to being $1,308. So $1,308 is what you're going to save. I look at everything in 5-year increments. In 5 years, if you went with this program, you saved $109 a month. In 5 years, you'd be saving $6,540. Let's assume that your $400,000 property is going to appreciate at 3.5%. In my opinion, 3.5% is on the low side. It's conservative again. I think it'll do better. Your $400,000 property will be worth $475,000. So that means that your appreciation there was $75,000. And the government is going to want their 5% of that $75,000. Your 5% on the $75,000 is going to be $3,750. So that's what your share is going to be. In this situation, it might work for you because over the 5 years, you've actually saved $6,540 and you got to give them back $3,750. So in generally, you've saved about $2,790. So $2,790 is what you've saved. This is if it appreciates at 3.5%. What we found out by doing a little bit of calculations over here, looking at it again on a 5-year term, if that $400,000 property appreciates at 6%, it's actually just going to be a wash. I think the government is going to be up about $210, but essentially it's a wash at that number. So you have to look at it and say, hey, is this something that's actually worth it for me or not? And if the appreciation rate is going to be higher, it may not be worth it for you in the long run. Then we finally get to something like paying back the government. The rule around paying back the government is this. When you go to sell that property is basically when you have to pay off that loan. You're gonna have to pay them back the money that they put in, plus the 5% of the appreciation you're gonna have to pay them back when you sell. From my understanding, there's gonna be a separate administration that you have to get approval for the sale of your property as well. Or if you decide that, hey, you're never gonna move, the money is actually due in 25 years. And it's a little bit of a gray area still because the program hasn't been around long enough for us to know how it's exactly gonna work. But if you end up holding this property for 25 years, you're gonna have to pay back the original amount the government put in. And I think at that point, what they'll do is they'll have an appraisal done on the property. So if your property in 25 years, for example, went from $400,000 to $1 million, probably hopefully does better, you're gonna have to pay them the 5% that was gained. So the $600,000, you'd have to pay them the 5% on that as their profit. If you actually go to refinance the property or anything else like that, you can still keep the government loan in there. You don't have to pay it back. The other thing also to remember is that when you go to close on the property, the lawyer actually charges you per mortgage that they're going to close as well. So you'll have probably a first mortgage coming in from a bank or something like that, and then you'll have the second mortgage coming in from the government for the 5% if you're buying resale. So the lawyer will charge you 2 fees to basically close both mortgages. My experience is it's probably going to be somewhere around the $150, $200 mark. It shouldn't be more than that, but there is going to be some administrative costs involved with it as well. I really think that in general, it's going to become a wash. To qualify for this program, you already, in my opinion, have to be well qualified anyways. And what it's actually doing, in my opinion, is that it's going to restrict you from actually buying a nicer property or something that you can actually afford more of. So at the end of the day, I'm not really sure if it's really going to benefit a lot of people here. I'd love to know what you guys think, what your comments are about this program. Like I said, I just don't think it's going to be valid for a lot of people. I think it's going to make more noise than anything else. And in my opinion, the time that it's being launched and having the election coming around just around the corner, I don't know if this is so much to help the general public, or is it this a mechanism for them to be able to get more votes? Again, I'd love to know what you guys think about this. Any feedback is much appreciated. Ask me questions, like our page, subscribe, generally get a hold of us. We'd love to help you out.
Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.